Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and have a beautiful retirement. What could be better than that? I am one of your co-hosts, Ben Barzideh, and of course, I have my trusted, esteemed co-host here, Matt Nadeau.
Well, hello, everyone.
And we are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here in Barrington. And we are fiduciaries. And as an independent, family-owned firm, we truly have the freedom to focus solely on your interests, not some corporations or those shady private equity companies out there just buying up everything these days.
Of course. And as always, just want to take a moment. We want to stop, say hi to all of our listening audience, but of course, to our clients who are listening today. We know you're out there. You tell us you listen. Thank you. And of course, we appreciate the trust you've placed in us, and we love every one of you. And we have a really good show today. We want to talk about a few specific topics. One, obviously, all of the attention has been around the war, the Iran conflict, and there has been some minor improvements in the market based off of some recent things that have come up in that. But we are still defensive. We're going to talk about some of the things we're still concerned about and dive into what we're currently seeing.
You don't want to miss that. That's going to be a good one.
And there's some stuff you may not have even thought of that we're going to touch on, what we're worried about, what we're watching. And then later in the show, we get a lot of questions from our clients and from people who we're meeting about Medicaid asset protection and how they can protect their assets in case something happens to them where they need to, maybe go into a living facility, some kind of need for Medicaid. You don't want to miss this. This is really important for your long-term planning.
No doubt. Nursing home expensive. So expensive these days. But you don't want to miss that. But as always, we encourage you to sign up to our YouTube channel on moneyhourradio.com. You can view this week's recording after our radio is aired. And then you can also see previous ones as well. And then please sign up for our weekly economic newsletter. It's called the 5-Minute Market Brief. It's so good. It's informative, succinct, easy to read. We get a lot of compliments about it. You really get an idea of what we're seeing and what we're analyzing that week. And then while you're on BN Wealth, please sign up. Please like our social media pages on Facebook and Instagram. All right, man, let's get into it this week.
Yeah. So, of course, like we mentioned, there have been some improvements when we look at things from a market standpoint. There's been some positive developments. And as many of our listening audience know, we use quantitative data, like buy and sell signals that are math-based. It's not our gut telling us what to do. And those signals are getting a little closer to potentially buying back into the market, at least at some level. But before we dive in and say, let's just do it with the little bit of positive developments we've had, there's some concerns we're seeing. So first, yes, we've seen improvements in the war in the Middle East. Some of the Strait of Hormuz has opened up a little bit. But in our opinion, the market surge this week on the ceasefire is leaving a big disconnect between optimism and reality. So the traffic in the Strait is still incredibly low. It's almost non-existent. And quite frankly, it needs to ramp up rapidly to justify some of the jumps we've seen in the market. And then if you look at two other big market influences, one we've talked about, there's issues with private credit concerns, and there's still AI anxiety. We haven't seen improvement on either front. So if anything, both of those may have actually seen small deterioration over the past month.
Now, starting with private credit, the number of firms restricting redemptions has grown. And by the way, that's not good. They do that when they are worried about investors pulling out all of their money. And then positively, most people, including the Fed chair, Jerome Powell, J-Pow, they don't see this as a systematic threat, at least as of right now, but it is still an area of concern and a weight on the financial sector. And the whole situation really is not established or stabilized, I should say. And by the way, Powell saying things are fine doesn't necessarily give me comfort or those warm fuzzies. A little sarcasm here, but it's not like the Fed has ever been wrong before or anything in their assessments.
Yeah, remember, Ben, the whole inflation is transitory?
Transitory until it wasn't.
That's right. Well, guys, like that is a big worry. And there's no resolution yet there. And then AI has always been the big growth boom. Anytime there's been a little issue in the market, AI has always helped it over the past few years. Well, there's a lot of AI anxiety still, and it hasn't gotten better. So when we look at capital expenditures to build out AI infrastructure, it's gargantuan. And the markets are still waiting for signs from these major companies that all of the AI advancement will actually justify this massive spending. And basically, they're like, please show us some profits, but there hasn't been any yet. And on balance, we've seen, there has been some improvement in some macroeconomic setup over the past month, but it's not from other of these areas. It's really been limited to the slight increase in transit through the strait and the tenuous ceasefire that's happened between US and Iran.
Now, meanwhile, in our opinion, the market valuation is now above where the fundamentals imply. And that's not necessarily on its own unsustainable, but in our view, for stocks to hold these levels, the ceasefire needs to hold. The Strait of Hormuz needs to open up, and we can't have any more deterioration in private credit or AI anxiety. We just don't need that right now. So if those things don't happen, gosh, then this market will be very susceptible to another pullback down. And in summary, that's why we're still out of the stock market. And while we had some positive developments in the market this week, and we are close to buying back in, if we see a bit more, we do need to see some follow through. We're not there yet, and we're still incredibly concerned about the direction of the market and which way it could go.
I mean, Ben, really the big thing we haven't even seen a result of is the inflation aspect that could be created by this conflict. But even before the conflict, there were signs that inflation wasn't coming down and may actually be going up. So that could be another issue with the stock market is if inflation rears its ugly head. The Fed, can you imagine if they not only couldn't lower rates, but started talking about raising them again? Oh my gosh.
Oh, that would be awful. And just today, so we're recording around noon, by the way, on Friday. So if anything changes in the market, it is fluid.
You never know. There could be one tweet.
Correct. Go up 2% from here or down 2% more. But one of the new developments today is the inflation numbers came out, and they were hot. It was up about an extra percent above where they thought it was going to be. And that doesn't even factor in much of the price increases in oil just yet. So my goodness, in the next couple of months, that could really tick up. Now, as long as it's only a temporary type of thing and there's good positive developments, I think the market will look past that and be forgiving. But again, we're not really seeing a whole lot of improvement just yet. And Matt, when we were talking about some of the things we're measuring and the quantitative, the technical analysis you brought out, folks, what we measure is actually, we have tools that helps us gauge the dynamics of the market under the hood, not the price movement that you see, not the stuff they talk about, on the shows or on TV. We analyze data and we let the data guide us. So while we have opinions on where things may go or may not go, we let the data guide us. And as of right now, even though the price movements have gone up in the market, the internal dynamics have not really improved correspondingly, at least not to justify the price increases based on what we're seeing.
Yeah, and really, like, not to get too technical or anything, but just real generalized. Like, if you think, where do we go from here? We look at a market table and gives us some idea of where the pricing should go. And the upside from here is really minimal. We see, like, if everything goes well, maybe 2, 3, 4% up higher. You never know. But the downside risk is so much higher right now. That's why we're in protect mode. And again, tomorrow things can change. It's a fluid situation. We can always monitor it and change our mind if the data changes. And we're going to let you know if things change here on the show. And again, I just want to let you know out there, we use a process called Advance and Protect. It's an actively managed tactical model. We use it for our clients. It's one of the things that makes us very different. our clients' money right now is protected. And I hope our clients have that peace of mind right now knowing that. And we always ask our listening audience, do you have peace of mind right now with your investments? I mean, wouldn't you say this situation with the war and with what else is going on in the market isn't something that not only you should be concerned with, but could get worse? And wouldn't it be reasonable to shift investment strategies, at least some, as if this war wasn't going on? They're just leaving you where you were before. So we think there should be things that you should be doing.
Absolutely. So don't settle for that. Don't settle for cookie cutter portfolios. We believe your money is way too important for that. So if you're more interested in hearing about our process, our Advance and Protect, as you know, we don't believe in riding potential market crashes all the way down while you're in retirement and watching money dissipate. So if our financial planning philosophy, if our investment philosophy resonates with you and you want to have your money managed like that, then please look our way. Call our office at 847-780-2980 or go online to schedule a complimentary consultation at bnwealth.com. All right, don't go anywhere, because when we come back from break, we're going to talk about how to protect your legacy with a Medicaid Asset Protection Trust.
Welcome back. Thank you for tuning in. This is Money Hour Radio. It's a show where we help you try and grow your money. We want to help you pay less taxes and, of course, have a beautiful retirement. And I'm one of your hosts, Matt Nadeau. I have with me my esteemed co-host, Ben Barzideh.
Hello, everyone.
And we're both founding partners and wealth managers at Barzideh and Nadeau Wealth Management. It's a comprehensive and independent financial planning firm. And we're located in Barrington, and we're serving the greater Chicagoland area.
And before we get into our topic, we just want to remind you, please sign up for our YouTube channel on moneyhourradio.com, where you can see this week's episode along with our previous ones. And then our weekly economic commentary that we sent out, our market update. It's called the 5-Minute Market Brief. It is excellent. You want to sign up for that at bnwealth.com. It lets you know exactly what we're seeing, the analysis that week that we have about the market. And then while you're at bnwealth.com, hey, follow us online in our social media pages, Facebook and Instagram. I think we're on LinkedIn as well.
Yep.
All right, now we're going to talk about how to protect your legacy with a Medicaid Asset Protection Trust. And you've probably heard the adage, money talks, right? But guess what? Sometimes it actually whispers too, especially when you're applying for Medicaid. Here's what we're talking about. We're going to dive in today to a topic that sounds about as exciting as reading the terms and conditions on something you recently bought, but stick with us because it could literally save your life savings and your legacy. What are we talking about? It's called the Medicaid Asset Protection Trust.
So, Ben, you're telling me you read all the terms and conditions of everything you buy and every app update?
All the time. No, not quite.
That's right. That's right. Well, this is probably more important than that even. So this is what we know. A lot of people don't know much about this, and many are not aware that before the government steps in and will start paying for like your nursing home needs, it actually makes you go through and spend all of your own money first. And once you're through your own money, then you finally qualify for Medicaid. So a Medicaid Asset Protection Trust is a legal tool which is designed to help individuals protect your assets while being able to still qualify for Medicaid benefits. And specifically, this is for like long-term care, like nursing home services. So at its core, this Medicaid Asset Protection Trust, it is an irrevocable trust. So irrevocable, just think can't be changed. And it means once it's created and you put money in it, the assets are transferred. Whoever created that trust, the grantor, pretty much cannot change it or revoke it. It's gone. That money's in the trust and it's somebody else's, the trusts now.
We joke about how it's kind of like getting a tattoo. There's no going back. So here's how it works. The grantor also gives up direct control and ownership of the assets placed into the trust. And instead, a trustee, someone other than the grantor, the grantor appoints, usually a lot of times it's your kids, they manage those assets according to the terms of the trust. And the grantor transfers assets such as your home, savings, or investments into the trust. And because the trust, not the individual, now legally owns those assets, they are no longer counted as part of the individual's resources when determining Medicaid eligibility. So there has to be certain conditions that are also met for that to happen.
Yeah, so the grantor, when we say that, that's like you're the granting that money into the trust. And so some people may think, well, I'll wait till I get sick and I'm going to go into a nursing home and then I'll hurry and move it all into this trust. And you can't do that. That one of the most important of these conditions that Ben brought up is something called a look back period. So that's currently 5 years in most states where they will look back and see if these assets are transferred into this trust within 5 years of applying for Medicaid. So, penalties could apply and there could be other issues that could delay eligibility. But the benefits of a Medicaid Asset Protection Trust can be significant. That's why you do it. So, first and foremost, you're trying to preserve that wealth that you've built up for your heirs. Your kids don't have to watch your life savings or, an inheritance disappear with all of the potential healthcare costs that come along with some of these long-term care or nursing home facilities. And the family home, great. It gets to stay in the family. Grandma's secret cookie recipe, all right, that's safe and sound as well. So
That's the important one, right?
You keep all of it.
Here's what's important, though. Without such planning, individuals may be forced to spend down nearly all of their assets on long-term care before qualifying for Medicaid, like we talked about earlier. So this Medicaid trust allows families to retain important assets for the next generation to protect it. And then second, you as the grantor, you can still benefit. You might be able to live in your home if it's in the trust, and sometimes you can still receive income from the trust, such as interest and dividends that are being generated by the investments in the trust. So you're not totally cut off or anything. You're just financially kind of on a leash.
And you can do planning when you're working with attorneys or advisors where you leave some money out of the trust if you need a little more access while you still have, some of the interest dividends from this trust. And then, of course, one of the other big benefits of one of these Medicaid trusts is it can provide peace of mind. You're knowing that your assets are protected and that there's a plan in place for long-term care, and that helps reduce stress for you, the family. And then this is also a big one. This trust helps streamline this eventual transfer of assets as, property that's held in a trust or assets that are in a trust. It avoids probate and it can make this whole process faster and more private while you're going through it.
By the way, probate is generally a bad thing. You want to
Yeah.
avoid that.
That's like a curse word in our industry.
It's like estate planning 101. Like the first day, they teach you probate bad, way to protect against it.
That's right.
So, of course, there's some pitfalls, right? There's always some gotchas in life. So let's go over those. First one is that the irrevocable nature of this trust is one of the biggest drawbacks. The loss of control. Once those assets go into the trust, guess what? They're not yours anymore. You can't just wake up one day and say, you know what? I want them back. And this can be difficult for individuals who may later need access to those resources for unexpected expenses. That's why, Matt, you were saying careful consideration and planning needs to be done to make sure you have enough assets outside of this trust to be able to take care of you if you need it.
Yeah, it can be dangerous if you do it wrong. And these pitfalls, one of the big ones is timing. I know I mentioned earlier, you don't want to actually wait until you need long-term care. At that point, it's almost always too late to make this strategy work. So it's not last minute, like, oh no, hey, everybody, I got a little something going on. We better fix it now. This is like, hey, 5 years ago or more, you were really smart kind of a plan.
This is a 5-year plan.
Yeah.
So, and then number 3, the complexity. This isn't, like you said, a do-it-yourself type of thing. So don't be Googling how to build a Medicaid trust at 2 a.m. or go to my favorite, YouTube University online, and try to learn how to do it yourself. One mistake can really mess up your eligibility and create tax headaches. And then, speaking of taxes, there's tax implications, there's administrative complexities. Setting up and maintaining a trust requires careful legal drafting, and then there's ongoing management as well.
Yeah, but really, when we just get back to at the end of the day, this Medicaid Asset Protection Trust can be a very powerful tool for safeguarding your assets and at the same time adding a layer of planning for long-term care. But it really is not a one-size-fits-all solution. We've just really want to have you realize out there is very careful planning for this that's necessary. And you need a clear understanding of the rules, and that really entails getting professional guidance, making sure that this works the way it's intended, and it avoids a lot of costly mistakes. So with this, it all starts with you're gonna need a good estate planning attorney. You're gonna typically need to loop in a financial planner like ourselves. Oftentimes, there's gonna be some tax planning where a CPA needs to be involved. So anytime we talk about these kind of financial planning, tax, or estate planning topics, we just want to reiterate it's essential to work with qualified professionals who understand these concepts, and they can tailor them to fit your needs. So usually we see a good financial planner like ourselves acting as a quarterback, where we're helping to coordinate with your other professionals to kind of make sure we're all on the same page and doing what's in your best long-term interest.
And if you're in need of a knowledgeable financial planner, someone who puts your interests first, someone who is a fiduciary, we would be honored if you gave us an opportunity to talk with you. If our Advance and Protect actively managed investment approach and our financial philosophy, the financial planning that we do, if it resonates with you, then please reach out to us and schedule a complimentary consultation. And here's how that would work. We would go over your current financial situation. We talk to you about your goals. Importantly, we can do something called a financial checkup. And this is where we can analyze your entire financial picture. We can look at your insurance. We can look at your taxes, estate plan, and investments. Most people have never had that happen all at one time. And guess what? If things look good, then you'll gain some peace of mind. And if there are holes, then at least you'll know what areas to fix. And if we can help you, that's great. If not, that's okay too. We know we can't help everybody. We'll still part as friends, and that'll be okay. But to explore becoming a client, reach out to us online at bnwealth.com. You can also call our office at 847-780-2980. And by the way, Matt, we don't have the dates quite yet, but we're going to have another workshop coming up soon. In the next couple of months, we're ironing out the details where you'll be able to learn a lot more about our process and some of these financial planning topics that we're talking about. So go to our website, bnwealth.com, and look out for that. But we're out of time. God bless you. We'll talk to you guys next week.
Take care, everyone.